Today we're diving into a simple trading strategy that I've been testing with amazing results. We're exploring a new version of Super Trend Indicator, and you won't believe the potential profits you can earn by applying this strategy to your trading routine. First, let's set the stage by choosing a trading pair. For this example, we'll work with the gold using a 15-minute time frame. You can apply this strategy to other assets and time frames too, but let's keep things simple for now. Now head over to your trading platform and click on the indicators section. A window will pop up, and this is where the magic happens. In the search tab, type in pivot point super trend and press enter. You'll see a list of results, so look for the one created by Lonesome the Blue and give it a click. This will add the indicator to your chart and allow us to start exploring its potential. The pivot point super trend indicator has shown great performance in keeping you in the trend for longer period. Its unique algorithm calculates pivot points and then finds the average to create higher and lower bands using the average true range or ATR. The script also gives weight to past pivot points, which helps smooth out the results. And if you want, you can even display the pivot points directly on your chart for a more visual representation of this powerful tool. Alright, let's dive deeper into this example on the chart. You'll notice that the pivot point super trend indicator draws lines and provides buy and sell signals. However, before jumping into trading based solely on these signals, it's important to know that the occasional inaccurate signals may occur. But don't worry, we'll tackle this issue together. To improve accuracy, we'll first fine-tune the indicator settings. In the Inputs tab, change the pivot point period to 3. And then the ATR factor to 1. Then set the ATR period to 7. Next, ensure that only the Show Buy Sell Labels option is enabled while disabling the rest for a clear and easy to read chart. Now head to the Style tab and disable all options except shapes and buy and sell signals. This will help maintain a clean chart layout. Now let's add the single indicator 5 EMAs as a second indicator for additional confirmation. Navigate to the indicator section once again and search for single indicator 5 EMAs. This indicator includes 5 EMAs that allow you to analyze trend direction from short to long-term perspective. But before we proceed, let's make a few minor adjustments to the single indicator 5 EMAs. In the Style tab, disable the very short EMA and short EMA options, leaving us with 3 EMA lines on the chart. Changing the intermediate EMA option to white and the long EMA option to green and increase their thickness. Set the very long EMA option to yellow and make it thicker than the other 2 EMA lines. Moving on to the Inputs tab, change the intermediate length to 45 and then ensure its source is set to close. After that, adjust the long length to 90 and then the very long length to 180 and keeping their sources as close. So now, in a downtrend, the runners are arranged in a specific order with the price candles in the lead followed by 45 EMA, then 90 EMA and finally the 100 EMA. Essentially, the price candles are fastest runners and each EMA is a slower runner following behind. This indicates that the overall market trend is heading downward. In an uptrend, the runners switch their order. Now the 180 takes the lead and followed by the 90 EMA and the 45 EMA and finally the price candles. This shows that the market trend is heading upward with the fastest runner, which is price candles, chasing after the slower runners. And when the market isn't clearly heading up or down, it's considered sideways or range bound. Here, the runners are either running at the same speed and staying close to each other, or frequently overtaking one another. So, whenever you're analyzing your chart, visualize these runners to easily identify the trend and plan your next move. In our examples, we'll see sell signals generated by the pivot point super trend indicator. However, before jumping into the trade, we need to examine the EMA lines. Here, the 45 EMA is above the 90 and the 90 is above the 100 with the price candle sitting above all of them. This tells us we're in an uptrend. So we should avoid taking any sell trades because that would go against the prevailing market trend. Now let's move on to the next signal, which is a buy signal. In this case, our strategy confirmed the signal since it aligns with the uptrend. And when entering the SPY trade, you can use the 90 EMA line as a stop loss level. For target, try setting it at the level that offers twice the risk you're taking on the trade. As mentioned at the beginning of the video, we've tested the strategy through 100 trades on the gold 15-minute chart and the outcome is pretty impressive. After conducting 100 trades over 10 weeks, the strategy demonstrated an impressive win rate of 71%. This means that out of 100 trades, 71 were profitable. The strategy also achieved a remarkable profit of 204%, a number that speaks volumes about its potential to help you grow your trading account. The profit factor, which is calculated by dividing the gross profit by the gross loss, turned out to be 4.9. Essentially, for every dollar you risk using this strategy, you could potentially earn $4.9 in return. A pretty solid figure if you ask. During the backtesting, we encountered 7 consecutive wins and 3 consecutive losses. These streaks shows us the importance of discipline and sticking to the strategy even when you experience a few losses in a row. The key is to trust the process and let the strategy work its magic. Perhaps one of the most encouraging aspects of our backtesting is the low maximum drawdown of 2.97%. This means that at its worst point, the strategy only lost 2.97% of trading accounts equity. A low drawdown like this indicates a level of stability and risk management that every trader strives for. Overall, the backtesting results reveals a strategy with an excellent win rate, a strong profit factor, and a solid risk management characteristics. Of course, past performance doesn't guarantee future results, but it's a promising sign for traders looking to try this strategy in their trading routine.